we are not at a disaster. This happened before. This happened before. We're just at a short term of oversupply. This oversupply will be fixed because the market is strong.
Well, there's no doubt when T. Boone Pickens speaks, plenty of people listen, even if he is almost repeating himself word for word. But it's how he couched his current statement about oil prices that gets the most attention. Let's welcome back to MidPoint veteran economist, chairman of the Society to Advance Financial Education, Steve Beaman joins us. Steve, good to see you again.
Well, it's always good to be on with you. Thank you for having me.
Always a pleasure, Steve. T. Boone Pickens. Now, about a month ago, or just a few weeks ago, he made a statement about oil prices eventually getting to a certain point. Well, he did it again today, where he predicted that Brent crude oil will be at $90 to $100 a barrel in 12 to 18 months. But it was what he said after that that caught us. The world got along fine with $100 oil. He said, now, it's easy for you to say, T. Boone, because you can afford it, but a lot of people are hoping that it stays down at 50. First of all, do you think he's right, the 12 to 18 months back to $90 to $100 a barrel?
No, I think he's talking to the futures traders, hoping to get them to bid the price back up. It was the OPEC nations recently came out and talked about a stable price around 80. And I think all of that doesn't take into account that it was just released that the United States has only 10% of the world's shale oil capacity. And in South America, they just discovered a great big shale oil reserve. So supplies will keep coming online, keeping that price a lot lower than $100 a barrel.
What about his other idea where he says, let's cut OPEC out of the picture completely, which may sound great for 2015, but don't you still have to keep yourself a nice little relationship with the guys who may be able to help you sometime down the road?
Well, in addition, there's more to that. As you know, the
Sure.
geopolitical realities are we need Saudi Arabia as a pseudo ally, let's call them. So we want to keep them as a trading partner in this arena. We're not going to cut out OPEC anytime soon, but we do want to just keep an eye on the price because it's helping consumers right now. And it could help to, spur a global recovery, which right now Europe and the Far East are experiencing a real slowdown.
But the biggest thing is to make sure that, once again, OPEC doesn't run us like they did in the 70s and the 80s, correct?
That's correct. And they can't do that now. We are the world's largest provider and supplier of oil in general. We're a net exporter of oil. So they don't have the kind of controls on us they had right after we took the dollar off the gold standard.
All right, third quarter in the U.S. grew at its quickest pace in 11 years. The GDP up to a 5% annual pace. Put that in some English for us.
Well, I'll put it in this English first. I apologize to people who listen to me. I thought we'd stay around the 3.5% mark. But what happened simply is that with oil prices coming down, gas prices coming down, the zero interest rate policy of the Fed, the third quarter of the year was a much stronger consumer quarter than analysts had expected and initially had been reported. So the 5% number is significant. If you take a $17 trillion economy and grow it at 5% a year, that's a lot of growth that we're looking at. So I was very pleased to see it. Hopefully it'll carry on into the fourth quarter, which we've expected it to be good. Maybe it'll be better than we expect there too.
Fair to say nobody expected oil to be dropping down to $50 and $60 a barrel. That's why you said 3.5%, it's now 5%. That's really the difference. Nobody expected that to happen.
Nobody did. I guess you can look in the rearview mirror and say, how could we not have seen it coming? But we didn't. The shale oil revolution is really taking hold now, and I think it's going to continue. There's no question about it. So I think that's good for American consumers. It's good for American employees out looking for jobs. We hope those jobs are full-time, not part-time, and have a nice wage with them. But generally, it's good news for the economy.
Last shot just in time for Christmas. Here we go. Now, I don't know about you, but I have people in my family who, if it's a Keurig, it's the only way to make coffee. Matter of fact, if I were to leave, I think Lady Shannon would tell me, you leave the Keurig. I think that's really what would happen. Now they're recalling more than 7 million machines due to safety concerns. Couldn't happen at a worse time, could it?
No, and I tell you, like you, I live on coffee. I don't know what I'd do without that gift that God gave us. But this is more of a public relations image for Keurig. You actually had about a 2% sell-off on the stock today, and that could present, frankly, a buying opportunity. This will not materially hurt that company's earnings. They've got a good global reputation. Generally speaking, there are people like me absolutely addicted to their product line. So I think in the short term, it's a buying opportunity. In the long term, it doesn't do anything to that company.
How many cups a day, Steve?
Oh, my gosh, 10, 12.
Seriously?
Yeah, I live on this stuff. I'm addicted to it.
Ladies and gentlemen, now we know why Steve is always up and always ready to go for an appearance here, because the man does not sleep. He can't, as a matter of fact. It's medically impossible at this point.
There you go. But with 6 kids, what do you do?
Okay, fine. I'm happy now that I don't. I just got my 1 cup of coffee. There you go. Steve, always a pleasure to see you, my friend. Thanks so much. A very Merry Christmas. Happy New Year to you. We'll talk to you soon.
And Merry Christmas to you and to the entire Newsmax team. Well done this year.
Thank you very much, sir. You too. All right, when we come back, award-winning broadcast journalist Cheryl Atkinson. Some notes about Ebola and the U.S. government and what they're not telling you.